It's Brian Preston, the money guy.
This one is heartbreaking as well. This one, I've actually experienced this with friends, clients, and others that have come into my life. And Joe, this definitely came through in Tiger King. Don't let family members cause you to derail your financial life. And specifically in this one, we're talking about poor Joe's mom. And Shirley, she's unfortunately, sadly passed away now. She did pass away not too long ago. But before Shirley passed away, Joe, through some of these shenanigans where he was changing the names of things and the structures and the lawsuits with some of his competitors, his mom lost it all. Lost all of her financial life and lost the house, was running GoFundMe pages. It's just sad, sad stuff.
You know, at the end of the day, I'm sure the reason she was willing to do some of it, and you know, you can make the argument of whether she knew what she was doing or she was being coerced into doing that. But most of us care for our loved ones, whether it's our children, our parents, our cousins, our brothers, our sisters. And we think that one of the things we're doing by allowing them to utilize us for resources, we're helping, but perhaps we're actually just enabling bad behavior. Because her mom, if she was willing to allow Joe to do that, she didn't allow him to maybe experience some of the pain he could have experienced earlier on where she thought she was helping. Maybe she wasn't helping.
Well, we've seen this. I mean, we have the book right behind us, Millionaire Next Door, and a concept that's all over that is a concept called economic outpatient care, meaning that you might be an enabler of bad behavior of your adult children without even realizing it. But let's kind of talk about this from things you can actually do for yourself. Some Money Guy tips on this is, first, think twice before co-signing or getting involved. Family and friendship is already hard. So do you want to add the complication of putting something that is complicated and emotional as money into the equation as well?
Whenever a client asks us, hey, I have my child or a friend or a relative who's doing this thing, this business endeavor, buying this property, spending this money, and they ask me to co-sign it, we always say, well, would you be comfortable if you had to buy the thing tomorrow? Because essentially, when you sign as a co-signer, you're not really taking a second position. You're not really taking a back seat. You're taking a primary position. And you have to approach the decision that way, understanding that if it goes wrong, if it goes bad and you co-sign, you're on the hook for that thing that you've signed for.
So I would treat co-signing, loans, all these things are kind of under the same umbrella. Basically treat them as gifts. You have to understand if you go into these type of deals that you have to be willing to give it away, because I'm going to go ahead and play it out for you. Let me go ahead and give you some scenarios, some stories. I have lent money to friends, and then what's interesting is that you see a friend that's in need and you feel really good in the short term that, man, I helped them out, I've made them better. But then as the months start rolling, the months lead into a year, and then you see the friend or family member go buy a new car or make some other train, and you're like, am I not getting paid back? You know, and that's the part, and you start building something, like I said, money and family and relationships is always already hard. You're going to add a complication because now you are wondering, why didn't I get paid back? Or then worse yet, what happens when the relative or family member ruins your credit because you didn't even know on the co-signing that they quit making payments? Guess who's left? Because their address is on it. The bank didn't reach out to you. They just totally ruined your credit off of one family decision. So be very careful. I kind of make co-signing is worse than lending money yourself because here's the problem. Lending, you're at least out of the money. You can treat it like a gift. Co-signing, they can blow up your credit without you even realizing it. So I treat co-signing like I do when somebody asks me to move a refrigerator or a piano. I tell them, look, if I've made it to my mid-40s with my back intact, we're not going to change it. We're not going to do it right now. So don't co-sign. I think that is a very scary thing. And then I'll throw in another caveat, business deals, because this ties into really Joe Exotic and what he was doing with his family. I have watched very successful people reach financial independence, have conquered the financial game, but then have an adult child come in and say, hey, I've got the opportunity of a lifetime. Let's invest in this. Or maybe you don't even need to invest it. Dad, Mom, how about you just guarantee this loan on this business that I'm thinking about setting up? You know, what could go wrong? I can tell you what can go wrong. You could lose it all. So it goes back to step one, which is talking about risk tolerance and risk capacity. Don't let Junior's dreams destroy your financial independence. Happens all the time, so I want you to be very careful. And that's the biggest part of Tiger King that kind of made me really kind of go, This is so sad.
was sad for the
I
mom,
really
for sure.
hated seeing Shirley, Joe's mom, and obviously Joe cared for his mom, but to see her be just cleaned out just showed how poor his decision making was for the whole thing.
Yep.